All right. So I've spent a stupid amount of time and energy testing, refining my model, and in this video, you're getting my exact 2026 A plus trading Bible, which is just the exact A plus rules I've refined through hundreds of backtested trades. And I'll also go over the 20 A plus trade challenge, which I'm personally doing to master my discipline and my execution and get payouts from this strategy. But I'll talk more about that later. First, I just want to go through the exact strategy and rules that I'm happy to have finished refining and I'm sticking with for now. Yeah, so as you can see, or if you've been following my videos for a while, I feel like for the past few weeks, I've spent so much time researching, studying, backtesting, spending countless hours in TradingView and Google Sheets. And it's gotten to a point where I'm finally happy with what I've got and I don't want to optimize it anymore. Because I feel like once you have a model that's clearly profitable, you only get diminishing returns from trying to squeeze out like a tiny bit more juice out of it. And I feel like it's not about finding the most absolute, perfect, profitable 90% win rate strategy. By the way, I wouldn't trust anyone that claims to have a 90% win rate. Like, that's just ridiculous. But I think instead, you want to find something that works and then just execute it ruthlessly. Like, even with a 50% win rate strategy, if you just give it time, allow the edge to play out, you can just scale with more capital, more prop firm accounts, copy trading, and you'll be laughing. Like, you don't need the perfect strategy. Anyway, with that rant over, let me show you where I've actually gotten the model to. So yeah, as you can see, a bunch of testing, but all right, here's where we're at. Yeah, so I've nailed down a bunch of rules and criteria to get my strategy to where I know what an A plus trade looks like. I know what an A plus Virgin Wick theory setup looks like. And I've tested over, what's that, 100 and something, 174 trades with A plus setups, 54% win rate, expectancy of 0.62 R per trade. Not bad. Here's the stats on NQ and gold. Gold slightly more profitable, but both still looking really good. Here are the stats on different sessions. Asia, of course, we love Asia. Asia's looking really good. London's looking good too, and New York. But yeah, Asia's the best, New York second, London's third. Yeah, so that's where everything's at with the model, with the A plus setups. So let me go over the actual theory and the process behind those stats. All right, so here is my current Virgin Wick Theory trading Bible as of January 2026. And this is what I will be using for the next 20 trades that I take. I'm very proud of this. I've spent a lot of time putting this together. So, okay, let's get started. The assets are NQ and GC, or NASDAQ and gold futures. The session trading times are, as you can see, these are in New York time, by the way. A lot of people ask me, what time zone, what time zone? Most traders that I talk to always refer to time in New York time. So that's just what I'm accustomed to. That's what I've always known. So these are New York hours. Yeah, some might say Asia doesn't go that far, or like there's like a dead zone between midnight and 2, but I've found pretty good stats around that time, so I'm keeping them in. Yeah, so Asia 8 to 2, London 2 to 5, and New York 9 to 11. Pretty simple. Okay. So the strategy is, let me zoom out a bit. We want to wait for an hourly candle to close above a Virgin Wick or Virgin Wicks. What is a Virgin Wick? Virgin Wick is a wick that has not been touched before. So that's a Virgin Wick, that's a Virgin Wick, that's a Virgin Wick. If you just draw a line all the way to the right, doesn't touch anything, that's a Virgin Wick. So this was a Virgin Wick that just got closed through. The Virgin Wicks become bullish points of interest if the Chad candle is a bullish candle. Then you drop down to the 1 minute, and you look for price to trade under the point of interest, it can simply just wick under it or it can close under it. Both are fine in my testing. Then you want to wait for a confirmed inverse fair value gap, and that would be your entry. And I've also found the IFVG can be on either side of the POI. It can be early or it can be late. Then you would put a limit order on confirmation of that inverse fair value gap. Your take profit will be, we'll start with the stop loss. Stop loss will be just on the other side of the IFVG or the entry candle, whichever is further/safer. Your TP is the obvious draw on liquidity, or 2R if the draw on liquidity is more than 2R away. If draw on liquidity is significantly more than 2R away, I will widen the stop loss a bit and lessen the TP a bit. No partials, no moving stop loss, no trailing, no break even, either stop loss or take profit, win or lose. My risk is 10% of the account's drawdown, which for 50K Lucid accounts is $200. Some people ask about contract size. It doesn't matter. The contract size will change depending on how far your stop loss is, so that you can always maintain the same amount of dollar risk. Maybe it's a good time to go over an example. Let me just show an example. Okay, so let's say we are here. 7 p.m. candle is just about to close, and it's going to close over this virgin wick, creating this bullish point of interest. Then from 8 p.m., drop down to the 1 minute. Drop down to the 1 minute, look for price to engage with the point of interest. So it needs to trade below, boom, there we go, it's traded below. Now we look for an inverse fair value gap to enter. Boom, indicator shows us there's an IFVG with particular settings, which I'll go over very shortly, just one moment. Then we would, where's my long tool? Long, on confirmation of the IFVG. Stop loss just below the IFVG or the entry candle, whichever one is further. So IFVG, right about there. Let me just remove this vertical line. Okay, so there is your draw on liquidity. Very obvious, this wick just sticks out like a sore thumb. So here is your draw on liquidity. And so with our stop loss in place and we move our take profit up there, 4R, which is way more than what we want 2R. So what this tells me is I can pull the TP back a bit and I can also widen the stop loss a bit, just so it's about 2R. There, something like that. So we have a bit of breathing room on both sides. And we'll go ahead and let that play out. Beautiful trade, lovely, look at that. Almost zero drawdown. Yeah, so that's a textbook example of an A+ setup, in my opinion. Okay, back to the Bible. So, yeah, like I said before, for it to be an A+ trade, not all IFVGs are built equal. They're not all equal. Some are higher probability than others. And what I've found is, with playing around with the settings, that you want a quick IFVG, like a V-shaped reversal, like this, like straight down and then straight back up. And so that's why I have a maximum of 6 candles before inversion. You can change this in the settings, as you can see there. And a minimum IFVG size of 0.1 ATR. That just gets rid of all the really small IFVGs that aren't very significant. Because, yeah, like a big one like this, you want to see the big ones. The big ones are higher probability because it means there's more strength behind that move. And then the last IFVG rule for an A+ setup is that it requires a liquidity sweep before printing an IFVG. And as you can see here, if you open up the settings, you can go to the liquidity section and just go automatic. You don't have to move that 5-minute thing. And then just put structure mode on short term and sweep mode on both. This is crucial. This is like the main part of the A+ setup. What it does is, if you look at this example below, it will only show IFVGs that sweep liquidity on a higher time frame before printing the IFVG. So just like that. It essentially just helps you not take trades that are, not take IFVGs that are just in the middle of chop. See, if it didn't sweep this, it would just be chopping around back and forth, up and down, up and down. But if you see a sweep, so you take out a major low or a major high, followed by an IFVG, that's just way higher probability. So yeah, that's a very crucial step. Just some other random rules. Each point of interest is only valid for an hour. After the hour, if I'm still in a trade, I will let it play out. I will not close it, but I will not enter any trade from the 51st minute. So the last 10 minutes of an hour, or the last 9 minutes, I will not enter a trade just because a new POI is about to be created. Another one is if price already delivers off the point of interest without giving entry, I will not consider it anymore. So for example, this one, price did bounce off the POI a couple times, but it never reached that draw on liquidity. That draw was always still there for the taking. So this still follows that rule. But let's say it already hit it without giving an IFVG, then I will consider that hour finished and I will not take it anymore. Even if I get another IFVG, even if I do get an IFVG later in the hour, I will not take it. Yeah, again, there must be an obvious draw on liquidity. I will not target empty space. And 1.5 R minimum or 2 R maximum, always. Yeah, this is what I mean by obvious draw on liquidity. Like, you can't miss it. Or like this, yeah. Super obvious, or like that. Super obvious draw on liquidity, it just sticks out. If that wasn't there, I probably wouldn't take it. Okay, so what does my actual process look like when doing this? So with this IFVG Pro Toolkit indicator, you can actually set alerts. So once you configure all your settings, you then turn on the alerts, and then you wait for an alert. So my process is I will wait for an IFVG alert. I'll then quickly look at the chart, double check that none of these rules have been violated, check that price has engaged with a respective POI. So if it's a bullish alert, I want to see price has engaged with a bullish POI. And then I'll consider that a valid setup. And so this is where indicators help. It's personal preference. I know some people like indicators. I know some people don't. I know traders who make lots of money with indicators. I know traders who make lots of money without indicators. So it is completely up to you. Some say it clutters their chart. I like indicators. It helps me. Let me show you an example of why it's helpful. So once you understand the model, I don't even need to mark out my POIs anymore because I have indicators doing it for me. Let me hop in TradingView, 1 second. All right, so here's what the process might look like for me. Let's get rid of these. Okay, let's go here. All right, so let's say I'm just going about my day. I don't even have TradingView open. I'm just, I don't know, at the gym or something. And then, boom, phone gives me okay, it's glitching out a bit. There we go. Okay, boom, phone gives me a notification. There's a bullish IFVG. So then I would open up my TradingView, either on my phone or my computer, and I would see, okay, looks like there's an IFVG. Did price engage with the POI? Yes, well, this CCT indicator tells me that there is a POI, a bullish POI right here. It's already marked it out for me. And it's also marked out the golden hour, as Master Chi likes to call it, which is the hour from which the POI is valid with this faint, I don't know if you can see it, but this vertical line here. And then it's also got the 1 hour chart shown here on the right. So just from a quick glance, I get a whole snapshot of the version wick theory and if it's in play or not. So since I'm very familiar with the model, I can then look at this and be like, well, okay, that looks like a valid setup to me. Prices, there is a draw on liquidity, price has not reached it yet. There is a bullish POI. And then I'll simply just set my order, something like that. Boom, I can widen that a bit, just like that. And then if you have a cloud-based trade copier, you can just set one order on your phone, on your Leader account, and that will copy across to all your accounts. And that would be the process for me. So that's what a plus process would look like in real time. And then just at the bottom of my Bible, I've also got some reminders that are important to keep in your mind. Process over profits. A perfectly executed red day is better than a poorly executed green day. It's always about how well you executed your strategy, how well did you follow your rules, not so much about the dollars that you made or lost. Profits will come as long as you can follow your execution perfectly. So just follow your system, trust your edge. We are playing a probabilities game, so allow time to play out, allow the edge to play out. You can lose more than half of your trades and still be profitable. There will be losses. It is part of a business. See it as a business expense, just like the same way businesses have expenses when they have to purchase supplies and services and all that. It's part of the game. There is no model that will win you 100% of the time. And just be grateful that we have the opportunity to make magic internet monies clicking buttons on a screen. Also important to have some reminders of why you are doing this. So for me, financial freedom, location freedom, time freedom, take care of loved ones, develop discipline in all areas of life, because how you do one thing is how you do everything, personal growth, and to help you guys, to help others achieve the same freedoms completely for free. Okay, so onto the challenge. So what I'm doing is I'm taking everything in this Bible and I'm going to trade it for a strict 20 A+ trades. It's just this is not a course, I'm not selling anything, it's not a mentorship, it's not a group, it's literally just a challenge that I'm doing myself, and you can do it yourself if you want. Yeah, it's just a challenge where we only take our highest quality setups, no exceptions, until you complete all 20, nothing else. Yeah, I want to give credit to Unicorn University, Ash Trades, and Kyra. This is where I got the idea from. They are running one completely for free. You can join their Discord if you want. But they are not starting it until some point at this month, and I personally don't want to wait. I want to get started now, so I'm just doing it myself now. But the rules are pretty simple. You just only take A+ setups that meet all of your criteria, whatever that might be. It might not look the same as mine, but I just told you what my A+ setup looks like. I will then journal every trade. Okay, yeah, good time to show you my journal template as well. So this is what mine looks like. This is what I like to track. You can make your own, put whatever you want in it. So I put, obviously, I'm gonna put 1 out of 20 for every 20 trades. So 2 out of 20, 3 out of 20 for the challenge, the result, and then date. Entry time will be 1 minute. Entry model will be version wick theory, either inverse fair value gap or a front run entry. Market, NQGC, session, Asia, London, New York, what hour of the trade, the trade was in. Did I follow my plan? Did I follow my rules? And did I risk properly? Yes or no? And what was the outcome? Win, loss. And then here in the plan, I'll just put a screenshot of what I saw at the start. And then at the result, I'll put a screenshot of how the trade played out. And then depending on whether it was a win or a loss, I will then fill out the following questions. Let's say it was a win. Would I take this trade again knowing the outcome? Yes. How can I improve my execution? Did I follow a plan? What was done wrong? What was done well? Or if it was a loss, is this a trade I would take again knowing that I lost? Is there any way to avoid this loss? How could I improve my execution? Did I follow a plan? What was done well despite the loss? So that's my template. That's what I like to track. And that's what I'll be using for this challenge, but you can use whatever template you want. Yeah, there is no timeline for this challenge. It could take weeks, it could take months, depending on the frequency of trades. But that's also the beauty of it. You are not forcing any trades. You're not trying to make any certain amount of money within any certain amount of time. It's just focusing on quality. But based on what I've found with my data, 20 trades will take me roughly 2 weeks using my A+ setups. Because I'm seeing roughly 2 trades a day on average from my backtesting. Why is this challenge important? Well, I think the number one reason traders fail is not because they don't have a strategy, it's because they break their rules. So that could be sizing up, risking too much, or just taking shit trades, taking B setups, C setups because they're bored, they're angry, they feel FOMO, various reasons. But this challenge will force you to only take the highest quality setups that you know are A+, so you can build trust in yourself and stop fucking things up, and to stop gambling and not taking random trades because you feel like it or because you want quick money. And yeah, I think this challenge can bridge the gap between knowing you have a profitable edge and actually profiting from that edge. And for me personally, I feel like I've been refining and testing a bit too much. So now this challenge will help me to stop refining, stop changing my model, and just let the edge play out. And also to prove to my viewers that I can actually get payouts from this strategy, because I have gotten payouts before, not from this strategy, but from other strategies like the unicorn model as taught by Ash Trades, or the 45-minute model by Lethality on Twitter. But yeah, here's just a random example. So I just took a random 20 trades of backtesting. I just selected a random date in February and March 2025. Took 20 trades, 10 on NQ, 10 on gold, and I got 10 wins, 10 losses, 50% win rate, with a total of 9.56 R and an expected R of 0.48. So let's just say we rounded up to 10 R in 20 trades, and that took roughly 2 weeks of trades. If you're trading a 50K prop account and you're risking properly, so 10% of drawdown, which is $200, that's $2,000 USD profit in 2 weeks, which then equals 4,000 in 1 month, just from one account. Now imagine you're trading like 2 or 4 accounts, easily 5 figures plus per month if you just stay disciplined and you let the process play out. But yeah, even if you don't have much capital, you can just start with one account. Even with a 25K account, that's 2K in a month from a $65 investment if you just stick to your rules. And yeah, Lucid is having a 35% off sale right now, so you can get a 25K account for $65. There is a link in my description box if you want. But yeah, that was it for this video. That's where my strategy is at right now and the challenge I will be doing. Yeah, I'll leave a link or a download to this somewhere in the description, because I know a lot of you guys have been asking for it. So yeah, I hope you like that one. See you next time.